Hello, my name is Eddie C, and I'm the author of Trend is Trend. The date today is 28th of October 2022. It's a Friday going into the weekend, and the time is 12:32 p.m. Just closed the morning session of KLSE Bursa. Welcome to Buy Rationale. Buy Rationale provides 15 reasons when considering a particular stock. A disclaimer here though, whatever sharing is done here is basically for information and education only. If you decide to buy a particular stock, please do consult your financial planner or a broker. The stock in question today is AGIA. The stock code is 7609. This is the best pick stock of the day. All right. And it is based on the pick criteria of price gain, uh, uptrend momentum. The price action is above the cloud, Ichimoku cloud, and above the MA 200 line. Uh, it has a relative volume greater than 1, but in this case, GIA is just slightly short of the 90 days average. But it is a profitable net cash company. Okay, let's get into the fundamental rationale. All right. The first thing we do is to calculate the intrinsic value of AGIA. All right. To calculate the intrinsic value, we use the enterprise value divided by the total common share outstanding. In this case, it is enterprise value 172,991 divided by total common share outstanding, which is 291,729 million. Okay, you will get an intrinsic value of 59 cent. And what is AGIA selling at the close of this morning? AGIA is sold at 1 ringgit and 27 cent. So it looks like buying at this price will incur you buying at a premium of 59 cent minus 1 ringgit and 27. Okay, you are paying a premium of 67 cent or 68 cent. Okay, in terms of percentage, it is 68 cent divided by 1 ringgit and 27. So you are paying about a 53 cent, 53% premium. So it is still worth buying. Let's see. Okay. The second rationale is AGIA has an operating margin of 5.52%. Uh, uh, which is a good, healthy return. But more importantly, it has an operating earning yield of 6.56%. What it means is that despite paying the 53% premium, it still yield about 6.56 percent yield. All right, that means the operating yield can cover for the capital gain. All right, and on top of that, the operating yield will further reduce the PE ratio of 17.91, 18. So going forward, we can expect a lower PE ratio. And I'm very happy to see that my acquirers multiple, that is the enterprise value to EBITDA ratio, is only 7.6, a very healthy payback period of 7.46 years. Uh, Agia pays no dividend yet so far. It has paid no dividend. What happened to my, sorry, okay, it sort of refresh, right? It has a negative free cash flow of about 6 million, meaning it is still, there will be some problem, it is going to expand in future. All right. However, it has a net debt of 146 million, meaning Agia is a net cash company, and it has a quite a big bad debt or doubtful account of 14.5 million. All right. However, the profitability or the performance delivery F score scores 8 as compared to 6, meaning looks like Agia is making a comeback on recovery. All right. Let's look at the financial statement afterwards to confirm that. The Altman Z score, the bankruptcy score in coming 2 years, is also very healthy. Is healthy in the sense that it is a 4.3 against the 2.5. So it is not going to go bankrupt anytime soon. The by niche score is also healthy at minus 2.91. The normal, regular, acceptable one is minus 2.5. All right. Now let's take a look at the financial statement. All right. I mentioned just now that Agia may be on a recovery phase, and heading for a reversal. Uh, it has, you can see the profit margin on the orange line. Actually, it has quite a big jump from 2020 to 2021. All right. But there is no dividend payout ratio. All right. In this case, it has not paid a dividend, likely of the not so good performance during the last two fiscal year. On the balance sheet, however, there is an increase in debt to asset. Hopefully, the increase of the debt is basically to generate for cash flow and also for capex and expansion. On the cash flow side, operating cash flow seems to be quite healthy. It's still maintaining, although it's a sideway, no increment, but at least it is still on the positive side. Now let's take a look at the technical. All right. Apparently, it seems that at today's trigger, we saw that definitely Agia has a trend, has a trend forming. There are one higher low here, two higher low, and three higher lows, confirming that Agia has formed a trend. And on the momentum side, the candlestick is above the Ichimoku Kinkyo Hyo cloud, above the cloud, and it is also above the MA155 line and the MA233 line, which is good. So confirm there is a momentum. All right. The third will be on the strategy. On the strategy, uh, it has a green candle going up, so I will consider this as a momentum buy. All right. And based on this momentum buy at the current price of 127, and heading towards the apex of wave 3, microwave 3 on the Elio wave at 1 ringgit and 45 uh, 40, 46 lah, 1 ringgit and 46 cents with a cut loss at 1 ringgit and 18 cent. It will yield a reward to risk ratio of 2 times, over slightly over 2 times, which is within our target. All right. And the other good thing is that we can see, although today's relative volume is slightly below 1, we can see that there is slowly a volume built up. So we can see there is actually a buyer's intact scenario forming up. All right, thank you. And I have presented to you the 15 rationale for AGIA, and if you think what I have shared with you here is informational and educational, please like, share, and subscribe. And once you subscribe, you get to join the TIFIC Investing Club for free on the YouTube channel Trend is Friend. Thank you very much. Goodbye and thank you. And have a good weekend ahead.